Over $50 billion in credit card rewards were handed out to American consumers last year. That sounds like a win. But here's what nobody tells you. That money didn't come from a bank's goodwill. It came from someone else's pocket. Every time you swipe a rewards card at a grocery store, the store pays a fee, about 2 to 3% of your total, straight to Visa, MasterCard, or American Express. The store doesn't eat that cost. It raises prices for everyone. So the person behind you in line paying cash, they're subsidizing your free flight to Miami. You think you're beating the system. You're not. You're just on the winning side of a transfer, and most people don't even know they're the loser. Banks spend over $1 billion a year marketing the idea that rewards cards are a gift. Yours, earned, deserved. Points, miles, cashback, Chase Sapphire, American Express Platinum, Capital One Venture. That's what Wealth Decoded keeps pulling apart. The gap between what financial products tell you they are and what they actually do to your wallet. The cards have become status symbols. The black card, the metal card, the invite-only card that arrives in a matte envelope. The average American household carries at least one rewards card. If Chase is spending $1 billion per year convincing you that your rewards are free, ask yourself one question. What do they know about this system that they're not putting in the commercial? Here's the mechanism. When you swipe a rewards credit card, the merchant, the restaurant, the gas station, the online seller pays an interchange fee. For a basic debit card, that's around 0.5%. For a premium rewards card, it jumps to 2.5 to 3.5%. Where does that money go? A portion flows back to you as cashback or points. The rest stays with the bank. Visa and MasterCard together processed over $10 trillion in transactions last year. Even capturing 1% of that flow is $100 billion. The free reward economy is one of the most profitable systems ever built. A perfectly circular machine. Merchants pay, cardholders receive a fraction, banks keep the spread. You're not beating the house. You're playing inside it. Merchants don't absorb those fees. They pass them on. When a small business pays 3% on every card transaction, it raises prices for everyone, including customers who never touch a rewards card. A Federal Reserve Bank of Boston study found that each cash-using household effectively transfers about $149 per year to reward-using households through this pricing mechanism. Each reward-using household captures roughly $1,133 in annual benefits. Run those numbers. Cash users, who are statistically lower income, are directly funding the travel perks and cashback of credit card users, who are statistically wealthier. This isn't a conspiracy. It's arithmetic. The credit card reward economy is, functionally, one of the largest and least discussed legal wealth transfers from lower income to higher income Americans happening right now. The gap widens when you zoom out. Families earning over $150,000 per year are nearly twice as likely to hold a premium rewards card as families earning under $50,000. Premium cards require good credit scores. Good credit scores correlate with income and financial stability. So the households that least need a subsidy extract the most value from a system that quietly raises prices for everyone else. American Express is the starkest example. Amex charges merchants 3 to 3.5%, the highest swipe fee in the industry, while delivering some of the richest rewards to its wealthiest cardholders. The merchants absorbing those fees? Often small businesses that can't afford to turn away Amex customers. This structure hasn't changed in any meaningful way since Bank Americard launched in 1958. Here's where it turns psychological, and this is the part banks absolutely do not want you thinking about. Even if rewards delivered pure value with zero hidden cost, the system is engineered to make you spend more. MIT researchers ran experiments where participants bid on tickets to sold-out events. Those paying by credit card consistently bid significantly higher than those paying cash for the identical item. When you hand over bills, your brain processes something close to physical pain. When you swipe, that friction evaporates. Add reward points, and the mental logic flips completely. Now spending feels like earning. Banks didn't stumble onto this. They spent decades in behavioral research building products that dissolve your spending resistance. Your free points aren't just costing you a checkout. They're rewiring how your brain categorizes money. And those rewards themselves? They're not as stable as the brochure implies. Airline miles are the clearest case of a private currency where one party controls the exchange rate for everyone else. Delta, United, American Airlines, All of them have quietly devalued their miles over the past decade. In 2012, a Delta SkyMile was worth around 1.5 cents. Today, it trades closer to 1.1 cents. United restructured its Mileage Plus program in a single policy change that effectively cut the value of accumulated miles by roughly 30%, with minimal advance notice to cardholders. You're earning a currency that the issuer can inflate at will, restrict to specific redemptions, and expire on their own schedule. If a government did this to regular currency, people would have a different name for it. Sign-up bonuses are the sharpest hook in the system. Earn 80,000 points after spending $4,000 in the first 3 months. That sounds like found money. But banks offer those bonuses because the math works in their favor. They know a meaningful percentage of new cardholders will carry a balance. They know the average APR on rewards cards currently exceeds 22%. And they know that interest on a carried balance will eclipse whatever was earned in points within a few billing cycles. The bank is making a calculated acquisition bet. Spend a few $100s in reward value up front to land a customer who generates thousands in interest over the following 2 years. The sign-up bonus isn't a gift. It's a down payment on you. There's one more layer most cardholders never consider. Every transaction on a rewards card is a data point feeding a behavioral profile. Your grocery purchases, your gas stations, your subscription services, your late-night impulse buys. All of it flows into systems that banks use to price risk, target offers, and in some cases share with partners. American Express researchers have publicly described models that can infer major life shifts, including financial distress, from spending patterns alone, often before the cardholder would describe it that way themselves. You receive 2% back. The bank receives a detailed behavioral map of your financial life, worth considerably more than 2% of your purchase history. That's not a side effect of the reward system. It's a feature. So here's the actual contrast, laid out flat. The pitch: use our card, earn rewards, travel for free, live better. The reality: you spend more because cards are engineered to reduce payment friction. Merchants raise prices to cover interchange fees, and you pay those higher prices whether you hold a card or not. Lower-income households quietly fund the travel perks of wealthier ones. Your miles get devalued without warning. Your behavioral data gets monetized. And if you carry a balance for even 2 months, every point you earned last quarter just became the cheapest thing the bank extracted from you. The person who genuinely wins at rewards is very specific. High income, pays in full every single month, never carries a balance, and redeems before expiration. That describes a minority of cardholders. None of this means you should cut up your rewards card tomorrow. It means use it with clear eyes. If you pay in full every month without exception, you're extracting real value from this system, knowingly. But go into it understanding there is a transfer happening and knowing who's on the other end. The actual power move isn't finding the highest earning card. It's understanding that every financial product designed by a bank was built to benefit the bank first. Study the mechanic before you play the game. Once you see who wins, who pays, and who never knew they were involved, you can't unknow it. If that kind of clarity is what brought you here, subscribing takes 2 seconds, and the next one will hit just as hard.